Hi everyone, sorry about the delay. We'll be starting now. We had a few technical difficulties. So I want to say first off, a huge thank you for coming and making it out today. And a huge thank you to our wonderful speakers, Guy Lachmann and Sivan Baram. So again, thank you for coming to our SigmaLabs open house. A little bit about SigmaLabs before we begin, and then we'll jump into our session with Guy Lachmann and a few words from our amazing alumni, Sivan. So SigmaLabs is under the umbrella of Serona Partners. Serona Partners, for those of you who don't know, has a few different activities. In addition to our 2 acceleration programs, we also have a venture capital firm, do innovation, and have offices all throughout Israel and in New York as well. I'm really happy to be here with all of you today. And with that, I think, Guy, thank you again for hosting us in your amazing offices here in Tel Aviv. I know it looks fictitious, but this is our real background.
That's actually a real background.
Yeah.
Great having you here. Thank you.
Thank you again.
So I was asked to provide a short lecture. I wouldn't say lecture is not the right word, but to speak a little bit about fundraising. And I was commissioned 15 minutes or so, which is basically crazy because it's I can speak for like the whole semester about every kind of war story that we all gathered in fundraising and so on. And I'm only one person, and I'm sure all of you have their own experiences that they can share and they can learn from. So I'm a partner in a law firm called Pearl Cohen. It's one of the largest Israeli law firms. It's also a US law firm. It's also the country's largest patent firm. My expertise is representing technology companies. I worked with many alumni and existing companies at Sigma and in other Serona related programs. Very proud for that opportunity. And without further ado, I'm gonna try and squeeze some tips on fundraising and related information in this coming 15 or 14 minutes. So yeah, let's go for it. So what I'm trying to convey, I don't know if the guys at home see us. I'm not sure. Yeah, you see our screen. I'm not sure if they see us, but okay, never mind.
No, they don't see you. They see the screen.
Just see the screen?
Yeah.
Perfect.
That's what
okay.
Yep.
So what I'm trying to basically convey is a phenomena that I have witnessed in recent months that involves what I call a disguised price round, or an equity round, if you may, which is basically an equity transaction that has, the cosmetics or the optics of a safe transaction. It enjoys, the great reputation that safes have accumulated over the years. But in reality, this is a fully blown equity deal with all related consequences. And what I'm trying to, the information that I'll share would help you guys a little bit, in understanding the differences between priced rounds and safe rounds, and what to watch out for and what to be concerned about, and so on. So for those of you who don't know, SAFE stands basically for Simple Agreement for Future Equity. This is the most common, I would say, method of raising funds today at early stage, by early stage companies. It was invented by Y Combinator in the US, and it's intended basically to allow the funding of young companies without all the hassle that involves a fully blown equity transactions, avoiding legal issues and legal negotiations, and simply enable rapid investment for very young companies. It's not a tool that is intended, or originally was not intended to cover large-scale transactions. And we've seen the last couple of years situations where, as all of you feel, the market is booming slightly. I think that we've crossed we passed the peak already in that sense, but it's been completely crazy here in the last couple of years. And we have seen a lot of money that was funded into, that was invested into companies. In many cases, we have seen large deals that were carried out using safes. I'm not 100% sure that that was the original intention of the people who created that vehicle. So we will try and understand what makes safe unique, and why is that different from an equity round. So the big question is that, one of the nice things that we've established in the industry is some sort of basic understanding that there is a form, there is a template that was created by Y Combinator. It's accessible. You can go online and just download it, and it's there for you. It doesn't cost money, and you can just you just plug in the numbers, and you print it or you downloaded it, and that's it. You get the money. In reality, in the US, I would say, safes or the forms are more respected in the sense that people using them are not changing them. But when it comes to Israel and to Israeli investors and lawyers, there is a tendency to change things. First of all, you're driven to do it because basically safes are intended for US companies. They include US legal terminology, and this needs to be amended so that it would also work with an Israeli company. The terms are a little bit different, the structures are different. There is the references that you have in the US form is relevant for US laws. It's not really relevant if you're doing it in Israel, and you need to make that adjustment. This is why you need lawyers to look at what you do before you sign it. The thing is, when you give a lawyer, a Word file, and you tell them, try and amend it, adjust it, then many lawyers in town are very much excited about adding additional features and changing some things in the safe form, and they still keep calling it safe. Now, I do not think, unfortunately, that all Israeli safes are born equal. What do I mean? I mean that in many cases, a safe is not necessarily a safe. And you should be very, very careful in reading the exact terminology and the exact wording. And every word counts. Every sentence could change the entire meaning and the entire economic effect before you sign it. In many cases, I've seen, especially this year, situations where safes, where the parties agreed to use a safe, and the safe that was produced was completely different or partially different from the Y Combinator template. And you just need to know what you're entering into. Why are safes so good? First of all, they're simple. They're 4 pages long. They enable a fast transaction. They're inexpensive. You're not supposed to start a fully blown negotiation session. You're not supposed to do fully blown due diligence. It's simply available there. You're not supposed to spend thousands of dollars in paying your lawyer or the investor's lawyer when doing a safe. That was not the original intention. The original intention was to allow 2 parties, a company and an investor, that are interested in doing business, are interested in investing, simply do business, simply work together, enable them a simple and easy and a cheap, so to speak, tool. Another important economic feature that involves the safe is the fact that it does not include a valuation. The safe, unlike equity or priced rounds, is basically does not immediately, when issued, involve any issuance of stock, any issuance of shares. It's basically a tool, a feature that parks above the company, so to speak, and converts into shares only at the equity round that converts it, that triggers that conversion. Until that equity round, the safe is basically, so to speak, above the company. It does not play a role in dilution. It does not involve the issuance of shares, and the safe holders, the investors, are not shareholders. In that sense, everything that has to do with valuation or with determining, negotiating how much your company is worth, or where could that valuation go to, all the things that you spend a lot of effort negotiating with your investors are all kicked out. They're irrelevant to a safe. If you are in a situation that you are negotiating valuation, then you're basically doing a priced round. If you are saying, hey, what's my current valuation? I'll structure a safe based on my current valuation, then you're in a way fooling yourself, because you're not doing a real safe. The safe is helping you, is intended to help you as a young company to avoid or to deal with the situation where your valuation changes on a daily basis. Every new feature that you write, every new client, every new customer, every new code, every new achievement, business achievement, every new hire is basically an event that impacts your valuation as a young company. And it changes on a daily basis. We are not interested in fixating that. So that's something that it's a feature that we need to adhere to, or push forward when we're using safes. Unlike safes, price rounds involved a fixed valuation. The parties could not do an equity transaction without agreeing on a company valuation. You need that in order to calculate the amount of shares that you are issuing. If you are doing a fixed valuation, you are negotiating. That negotiation, this is a private company. It's not science, and you basically need to reach an agreement with your investor that the investment will be carried out based on a value that is reasonable, that is fair, and so on. There are many factors that impact that negotiation, that discussion, which were all pushed out when using a safe. In addition to having a fixed valuation, since you're actually issuing stock, issuing shares to your investors, the transaction would also create a dilution. There would be an immediate dilution of your shareholdings due to the fact that shares were issued. That's a good thing. Dilution is not necessarily a bad thing always. People are very much afraid of that, but in many cases, it basically means that the pie has become larger. The company is worth more, and it's actually economically could also be a good thing. It's not necessarily a bad thing, and we see many CEOs that are in panic whenever they hear the word dilution. But dilution is part of life. It's not something that we can avoid. We need to ensure that dilution would not be severe, would not leave the company or leave the founders in a situation where they have no motivation to continue, and that the journey would not be worthwhile for them anymore. Another advantage that you have in a priced round is the fact that there's clarity. Everybody knows exactly how much they hold in the company. Safe does not allow that. Safe, as we said, is basically parking, waiting for that price round. Until then, there is no real way of knowing exactly how much shares will be issued when the safe is converted. And you can't really know what would be the effect of dilution. You can get an estimate, you can do a simulation, but there are various factors that impact that. It's not science, it's never clear. Another very clear and obvious feature involving priced rounds, and the fact that they involve a fully blown set of legal documents. They include not just the investment agreement, but also the articles or the certificate of incorporation in the US, shareholders or investor rights agreements, corporate resolutions, and all sorts of other ancillary and related agreements that are part of the discussion. Obviously, when you have a library of agreements, you have a lot of negotiation. Your lawyers are spending time fighting each other or exchanging drafts. And this costs money, this takes time, and so on. Next. Spacebar. Spacebar. No, okay. This is a summary table that I've prepared, just explaining the differences between equity and convertible transactions. The main agreements that are used in an equity deal are the SPA or Articles of Association in Israel. In a convertible deal, it's the SAFE. In the past, we used to call it a convertible loan agreement, or in the US, they call it note purchase agreement. It's a little bit different from the SAFE because it involves, in Israel, features of a loan which are left outside of the SAFE. Security that is issued in an equity deal, we have the issuance of, in most cases, preferred shares. Convertible or SAFE talks only about future shares. There is no issuance. The valuation is fixed and clear in an equity deal. There isn't a valuation in a SAFE deal. Investors are getting preference in an equity deal, and SAFE investors would get a discount or a cap, basically a ceiling, a maximum valuation for converting their SAFE in the equity deal. Equity also brings a variety of additional rights that are included in that library of documents that I've mentioned. You don't have all of that in a SAFE deal. Again, in a normal SAFE deal, not in a SAFE deal that is disguised or as an equity deal, basically. When you have all of these, you should start asking yourself, am I actually doing an equity deal here rather than a SAFE deal? We discussed dilution and so on. Next. My last slides is basically helping you identify, how much time do I have? Okay. Identify those price rounds that were disguised as a SAFE deal. And this is really real life experience. This is actually on my desk right now. I received it from a very, very respectable investor and a very top law firm that prepared it in a very professional kind of way. But it's basically it's not a SAFE round, despite the fact that it has the title of a SAFE round. And why is that so? So in a SAFE round, as we mentioned before, there is a cap. A cap involves the maximum valuation based on which the SAFE money would be converted into shares. So, for example, if the cap is 10 million in the SAFE and the actual transaction involves a pre-money valuation of 12 million, then the SAFE investor would ignore the actual valuation, the 12 million, and be converted based on a 10 million valuation. This shows, in my example, a 20% discount off the valuation that was agreed with the lead investor that financed the company in the equity deal. Y Combinator clearly writes, they write, they have a user manual that says it in bold letters that the cap is not supposed to reflect your current valuation. The cap that is used in the SAFE is supposed to represent a future valuation and upside, because if you know your exact valuation today, then why shouldn't you just do an equity round? If you know exactly what you're worth, if you know exactly, if you already started and held the discussion about your valuation, we lose the purpose of using a safe. Another issue is the fact that a minute after you close that safe round, your company has the safe money in its bank account. So that valuation, so to speak, is already immediately reflecting a discount because you've increased your valuation at least by the amount of money that was invested. So the cap is not supposed to reflect your actual valuation. Unfortunately, in Israel, in most cases, this is what we see. This is the market norm. I'm not saying that we need to change the market. No, I'm just trying to challenge the decision whether you should use a safe or just go for an equity round, and do not feel that you're doing a safe where you actually economically been doing a priced round. Another feature showing that that situation, the lack of clarity, is the fact that sometimes you have a safe that includes a maturity date. Maturity date basically means that after a certain amount of time, the safe money converts into shares, in some cases automatically. If you are in a situation where your investor would receive automatically shares within 12 months, regardless of an equity round that converts the safe into shares, economically what you've done is an equity round. You simply gave him a 12, or he gave you, the investor gave the company a 12-month grace period for issuing the shares. Because if it's going to happen automatically, if the maturity date is too short, then again, simply do an equity round and avoid the lack of clarity. Additional situations is where, as I mentioned briefly before, we see YC safes that are being abused and manipulated and include all sorts of nice features that lawyers add, and they encourage their clients to agree to as part of the safe. If your safe is 10 pages long, then this is not a safe. If your safe includes a side letter that involves terms as if you're doing a fully blown equity deal, then this is not a safe. You should call the child by its name. And if you end up negotiating for 3 months and paying tens of thousands of dollars to your lawyers, then again, this is not the original intention. This is not why you chose a safe round rather than an equity round. Y Combinator includes about 4, if I'm not mistaken, representations, very basic representations by the company, and also a few by the investors. Presentations are basically the information the company is sharing with the investor so that he could base his business decision to invest in the company on that. When we see safes that include like 10 pages long, or even 20 representations or 10 representations, where the template is supposed to include only 4, then again, this is not a safe round. This means that there is a fully blown due diligence that is conducted, which is something that you should do when you do a price round. All of this results in a higher cost for the transaction, and also in some cases is not economically worthwhile when it comes to the amount of money that was actually raised. So my message today is be aware of things, be conscious to the fact that not every safe is born equal, and that some safes differ from others, and that you should very, very carefully read those small letters because something that is coated with the word safe does not necessarily mean it's a safe. And in many situations, the better or the preferred business decision would actually be to go ahead and do an equity round and avoid the ambiguity in a safe that looks like an equity round or acts like an equity round. Yeah, I'm sure there are questions.
Yeah, so I would be happy if you guys could add your questions in the chat, and at the end we'll get to any questions, whether they could be about the program, about participating in the program, or about safe versus equity rounds. It's important for me to note before we move on to Sivan that startups that do get accepted to the program participate in between 2 to 3 workshops a week during the 3-month acceleration program. And these workshops are presented by different leading professionals and founders and investors in the Israeli ecosystem. These professionals can be either founders of their own VCs, top VCs, or professionals that have either founded or exited their own startups. These topics can be anything from startup financials to how to get your first design partner, equity versus safe rounds, and many other interesting topics. So Sivan, I'd love to hear a little bit about your experience in SigmaLabs, where you are today, and sort of your whole journey up until now.
Okay, with pleasure. So first of all, thank you so much for that. It was very interesting, highly relatable. And thank you for inviting me, Shai. So Shai, actually, and I, we just met, so Shai doesn't know what I'm going to say, right?
Yeah, very excited.
But of course, SigmaLabs was one of the best things that happened to us as a company. So my name is Sivan Bar'am, and co-founder and CEO RAD. We're 3 co-founders. So alongside me are Natalie Staub, co-founder and CMO, who's located in London, and co-founder and CTO Bezalel Rakovsky, who's here with me. So we were accepted to SigmaLabs about 3 years ago. It was the perfect timing for the company. I actually just quit my job as an accelerator manager in northern Israel, and finally went all in on my dream, on my startup dream. And we got in pretty early on, because what we had was a preliminary kind of MVP. We had a first pilot. We hadn't raised any money yet, and we were kind of unsure if a program like that would be a good fit for us. We were very happy to be accepted. I think the reason we got accepted was was a result of the product, of course, the potential of the product, but I think also the team and the passion that we had as founders, because we were so eager to move forward, and we were so sure of our product, and we already had first traction, and we really wanted a first vote of confidence in us, and I think that's exactly what we got by joining SigmaLabs. The main, obviously, reason for joining an accelerator program is to accelerate your business as fast as possible. I think that's exactly what happened to us. We moved very fast. We raised a first investment throughout the program. I think the motivation that this program gave us was definitely one of the reasons why we got that confidence. We raised that money. We boosted our product throughout the program. And actually, I don't know if I'm supposed to talk about 365X.
Yeah, more than welcome to.
But we were privileged to also continue on to the more advanced, the scale-up program that also is owned by Sorona. And we actually didn't plan of going through another program, but we actually got a call from Tut, and she invited me to take part in it. And we are selling in the States. We did plan on selling in the States back then. Of course, we're selling today. And Tut was like, why not? We have a program in New York. We'd love for you to try it. And we we were accepted to 365 Accelerator after that, and that's, I know it's a different story, but still, it was of course a huge honor for us to take part in both of the programs, and 365X, of course, in New York, even during the pandemic that just started, then gave us a huge, incredible boost. And so I think, I don't know, Shai, I'm happy to answer any questions. If you want me to go on, I can talk a bit about the program, but actually I think maybe it would be best if I just answer what people are interested in. Yeah.
So before we move on to questions from the audience, I'd love to ask you a few questions myself.
Of course.
So I'd love to hear from your experience, what would you say is sort of the biggest added value for the program? So I know that for those who don't know, during SigmaLabs, so let me backtrack for a second. During the SigmaLabs program, we take between 8 and 10 Israeli pre-seed and seed startups who have highly motivated teams, full-time founders with a technical founder in addition, and some type of basic validation or MVP of their product. And during the 3-month acceleration program, we try to cram as much material and information into your minds to really accelerate you and your team to early stage success. You know, SigmaLabs is a by founders, for founders accelerator, and really the objective is to give you no BS information that's really going to take your startup from here to the next step. So during the 3-month program, you're matched with a lead mentor who guides you throughout the 3-month acceleration process. These lead mentors are vertical specific to your startup. They guide you throughout the process on also the personal, the business, and the technical points. So as if you're a fintech startup coming to the program, you'll of course be given a fintech mentor. And these are usually mentors who've either done 1, if not 2 or 3 exits already. So these are people who come from lots of technical and a lot of know-how. In addition to that, we have the workshops that I spoke about earlier, which happen during the program 2 to 3 times a week on really any topic under the entrepreneurial sun, as I like to call it. In addition to that, we have the Accelerator Partners ecosystem, which is made up of a lot of different mentors, partners, unicorns in our ecosystem such as Cherry, Deal, Verbit, just to name a few. So I'm curious to hear from your perspective, what would you say is sort of your biggest added value? And what would you say was sort of that breakthrough point for you where you said, okay, well, I'm so happy looking back at SigmaLabs, something that I joined?
Okay, so I think I mentioned it maybe in just a little bit, but I really think the biggest value that we got, first of all, was motivation, because we were very early on, and we did feel like we wanted a vote of confidence. We got it. So I think that's the first thing. Of course, the program itself includes a lot of highly valuable content, and we met up with super relevant mentors. Like we were connected to mentors that were relevant to our program, to our product, specific to our product. I'm still in touch with those people today, of course. Some of them like super senior engineers and all kinds of mentors that are relevant to what we do, and they really help us with the product market fit and the first phases of our product development. So of course, I mean, it goes without saying how valuable those connections are. We were connected to investors, of course, and to customers. So what more can you ask? I mean, it's like hiring a biz dev that's your superstar biz dev person, and they stay with you for life. So we really do feel like we're part of a family. So I mean, that's also very important to mention. It's not like the program is 3 months and that's it. Never hear from you again. We are in touch all the time, in touch with the team, the Serona team. We're in touch with each other. That's also something that I think is very important to emphasize, the community between the startup, the founders. Some of my best friends are from those 2 programs that I took part in, SigmaLabs in 365X New York. And it's for the value from the founders is priceless, because we're in the same, we're in the same journey together. Everyone is struggling with exactly more or less the same challenges, each company and their phase and their industry, but obviously everyone are facing the challenge of moving forward in every aspect. And so it's very comforting to meet people who are in the same position or stage as you. And so I think that a lot of the times, and founders that I speak to, they don't realize how the community of the startups is also very significant when joining the program. So yeah, that's what I'm thinking.
I really, really appreciate the warm words. It's something as a program manager, I take a lot of pride in keeping the community really tight knit and meeting with our alumni. And even though the program is a sort of a 3-month acceleration, but keeping the community really tight knit and family oriented. And as a program manager, it's something that you really strive to achieve and something you really push for. But hearing it from one of the alumni who even finished the program, not even recently, but sort of in the past year, it's very exciting for me to hear. And I must say that honestly made my day on a more personal level.
I really mean it.
I think that really one of the strengths and one of the main differentiations with SigmaLabs is it's one of Israel's leading and longest running accelerators. So really the ecosystem and the network that's sort of been built over the past years is just an incredible thing to be part of. And it really is a force to be reckoned with. So before we move on to questions from the audience, I just have a question for you as well, Guy. So Pearl Cohen have been one of our longest and honestly most noteworthy partners in the past years. And Guy meets with, I would say, almost every SigmaLabs startup, either him or one of his amazing team members. So I'd love to hear sort of what your experience has been working with SigmaLabs startups throughout the years and sort of how that relationship has been built for you.
Thank you. So indeed, we are assisting the Sorona programs for several years now. We've also witnessed ever-growing market share and influence you guys all have over the industry, and the amount of startups that pass through you in the various programs, and also the amount of effort that each one of you invests in promoting those startups and in understanding. I think there are many accelerators in Israel, and I think that Sorona completely Sorona programs spot out as one of the top ones for sure. We are very humbly supporting the activities by trying to assist the companies in everything that has to do with legal aspects. We provide lectures concerning intellectual property, on the team building and founder agreements, on fundraising, and on things that are a little bit more complicated, such as privacy and going global and working with corporates and stuff like that. So we're trying to give knowledge. We are trying to also open our network and assist, and we are also giving a one-on-one sessions with the various founders. And really, of course, this is something that is subsidized by Sorona or by Sigma, and it's part of the acceleration. I think that when launching a startup, having dealing with legal issues is an evil you can't avoid, basically. And the amount of mistakes, I've seen this survey recently where 18% of startups, it was published by CB Insights, 18% of startups fail because of legal issues. So it's not the impact of doing wrong decisions when it comes to the legalities of the company is huge. So we are there in trying to assist in raising flags or providing solutions, to those specific situations, and also offer additional services using our New York office for those that continue to the New York program.
All right, amazing. So if you have any questions in the audience, we're going to start now. If you have any more, feel free to type them into the chat. So the first question was about the differentiation between 365X and SigmaLabs. So 365X is SigmaLabs' older sister. It's more aimed for post-revenue startups who have usually already raised their first round of funding, and they're looking to scale up into the European and American markets. So the differentiation really being is the stage of the startup, but they do work very hand in hand together. Second question being more for Guy, they were asking
Do you remember that?
Yeah,
What?
How do you remember the question?
Well, no, so
We need to find a way to see the questions also. If, yeah, so what was the second?
yeah, so the second question was for you actually about best practices in sort of an equity versus a disguised equity round. Sorry, a equity versus a disguised safe, exactly.
And so I touched on that, and there was also somebody that asked for the presentation, and we can happily share that. I think the bottom line is to be aware and to receive good advice, and not to, in Hebrew, there is a saying, לא כל מה שנוצץ הוא זהב, meaning not every rock that shines is a diamond, so to speak, or is gold, meaning things may appear in a certain way, but in reality, they are very different. And in the course of the last couple of years, we've seen safes that were not structured accurately and resulted in a massive dilution to founders. And this is something that you can avoid or try to avoid. And at least if you make the decision and take that money, just be aware of the consequences. That's my message. I mean, do it. I mean, you receive the required education. Okay, so how do you decide the cap discount? Normally, I would take a multiple over what you think is the valuation of your company right now. Imagine that you're sitting in a room and an investor comes in and wants to invest money in your company. Let's say you're looking for $500,000, $1 million, and that investor is asking you, okay, what's the valuation? So if the valuation, if you're asking for $3 million for those one, or if the investor, if you think your current valuation, had you done an equity round was $3 million, then you cannot ask for a $3 million safe. That would be an economic mistake. So you need to have those $1 million come at a higher valuation than what you would have received if you would do a fully blown equity round. This is, I think, the way to understand it. Discounts, they vary between 10% to 30%. This is what we see in the industry. 10% is considered very low. 30% is considered very high. Normally we see 20, 25, 20, something like that. And you should always ask in terms of determining the cap. It's not science. There isn't a textbook saying, okay, how much I need to, my cap to be. You can speak to other companies, you can talk to your lawyers, and assuming they do a lot of these deals, they can tell you what they see, and that's also important. And the bottom line is that you should always ask for a simulation. You can prepare an Excel spreadsheet that simulates the dilution once the safe is converted. This would give you more, this would enable you as a CEO to make a more of a educated decision on whether this deal is good for you or not. Because otherwise you're sitting in the dark with no real understanding of what you've signed.
Amazing. So there was another question for you in regards to that, but I think quickly I'll answer. There was a question about the differentiation between 365X and SigmaLabs, and if they're working B2B, B2C. So SigmaLabs and 365X are both vertical agnostic, working with verticals from all different types of verticals, and in both B2C and B2B, whatever it may be. Again, what we're really looking for, especially in SigmaLabs, is highly motivated teams with a technical founder and a basic MVP. But Sivan, I'd love to hear sort of your take on the differentiation between Sigma and what you received there, as opposed to 365X and sort of the transition between them.
Okay, so yeah, it definitely has to do with the stage of the company. As I mentioned, we were very early on when we were accepted to Sigma. We just had an MVP. And when we were accepted, by the time we were accepted to 365X, we already had, of course, a working product, a launched product. It was already launched in Israel, in the States, and in the UK. We had happy customers, paying customers, and we were ready. So we were ready to raise more money. We were ready to grow. And we weren't, as I said, we weren't planning to do another program, but obviously we were looking at the US market. And since 365X is in New York, it was very kind of appealing to us. And we decided to go for it. And of course, it included an investment, and which was very nice because it was also an early stage investment by Sarona. So another vote of confidence, a very serious one from Sarona. And the program, of course, again, it's specific to the startup. So everything we needed was kind of customized or personalized, especially for us. So we had a small, I don't want to share all the secrets. I don't know what I'm allowed to say.
I feel like a guy's already shared the majority of the session.
But yeah, it's a different stage of the company mostly. But happy to share more in person if you'd like.
What are some of the primary e-commerce third-party partnerships and highest priority marketing activities to build a successful position? So I think that might be.
That's for me.
Can you maybe clarify on your question a little bit?
That's a long question.
What are some of the primary e-commerce third-party partnerships and the highest priorities of marketing activities that build a successful position?
How to basically build a successful marketing program.
So this person wants a red pitch, I think. You need to contact me in person. I'll pitch to you. If you mean throughout the program, of course, we were looking to partner with brands or online brands. We started out with cosmetics and fashion, and we moved up to different sectors. We also partnered with e-commerce experts. That connected us to more brands. And of course, we were also looking for early stage investors and VCs that were interested in e-commerce related products. So I hope that answers that question.
And I want to just touch quickly on the point before we move on to our final question about the personalization of the program. It's important for me to iterate that despite the fact that SigmaLabs runs on a cohort basis, meaning that we run in waves. So we take between 8 and 10 startups. So it's important to us that we do run in waves, that we have this community orientation, that we're working as a group, and that because you're all coming in at a pre-seed, seed stage, you guys are all experiencing really similar issues, similar difficulties. It's something that as you go and you learn with them together, you get a lot more experience in managing that issue as yourself. But despite the group setting, there's also a hyper-personalization to the process, where you have a lead mentor who's vertical specific to your startup. We have group workshops, which are then followed up with, as Guy said, with office hours, where you can dive a little bit deeper into the depths of your startup and of your vertical, and sort of get more direct insights about you and your own personal process. So with that, I think, Guy, let's move on to the last question, which was for you in regards to what's better, a cap or a discount?
Yeah.
If there's a final question.
Yeah, generally a discount is better because unless the cap is high enough, this discount would achieve a lower dilution. Yeah. May I just add to what you said about the program? I think that today it's really crazy out there, and the challenges that companies are facing are becoming ever more complicated. Many teams have, amazing capabilities, but they are missing a certain thing. and they're sometimes are doing something, but they don't really understand that there could be a different way of doing it. Accelerators were invented in order to help those companies think a little bit differently, challenge their ideas, challenge the way they do business, challenge the way they build their product, challenge the way they launch marketing or an HR program, and especially when they're dealing with larger corporations or overseas. So there isn't a textbook that somebody could just pull and read exactly, use a manual how to become a unicorn, steps 1, 2, 3, 4. And it's a complicated effort. And sometimes you have an amazing idea, but you still need somebody to help you crystallize that idea into something huge. And I think that outside of the box thinking has helped many startups achieve a lot of goals. And I think that's the beauty in an accelerator. And I think as I said before, there are many accelerators out there. It's very clear, you can very clearly create a list of 5, maybe 10 accelerators that are top. And I think that in most cases, the experience that startups say is that this really pushed them, helped them, directed them in the right course, helped them understand things that they couldn't have reached otherwise, or that it would have costed them a lot of money, a lot of effort to understand without having that guidance. So I think it's a healthy thing to join an accelerator. That's my
Wow, very beautifully put. So on those very poignant words that we're going to end the session, a huge thank you again for you guys making it out today. And thank you to Guy and Sivan. I really appreciate it.
The audience could also see the traffic expected when leaving town.
You can see the traffic expected us.
Up next, your traffic support with Guy Lachmann.
Based on that, you shouldn't leave your office.
Yeah. All right. Thank you, everyone. Again, if you have any questions, feel free to send us by mail, and the recording will be sent out shortly.
Thank you.